Bitcoin is crashing today again, and so we do on this channel what we always do during those time frames. When we are in doubt, we zoom out, and so for this video we've got a lot of interesting on-chain charts. All of those charts are taken from the Glassnode newsletter. So Glassnode brings out a weekly newsletter called Insights. The link is in the video description. It's completely free. Don't hesitate to check that out. And we will look at the behavior of different market participants. How likely are we going to fall further? Who's buying? Are these strong hands? Are these institutions? Are these rather small retail investors? And the first chart we are looking at is the number of addresses with a non-zero balance of Bitcoin. So you see over the long term, this is obviously increasing due to increased adoption, due to people opening up wallets, maybe potentially for dollar cost averaging. And we have seen a pretty steady growth even after the beginning of last year, where we started to somewhat consolidate in price. We've seen the growth in wallet addresses up until May of 2021, roughly. When the price stopped to increase further, we saw somewhat of a plateau in growth that then continued once we hit new all-time highs again. Now we are looking at a plateau again. So no further growth in the last weeks. Is this positive? Is this negative? Who's currently buying and selling? What's causing the decline? This is what we're going to look at in the next charts. But first, let's have a look at the active entities and addresses. So the difference here is that a single entity might hold several addresses. Glassnode is grouping some addresses into a single entity. For example, if they are owned by one centralized exchange or by one institutional investor, and that's known, then we have some kind of an aggregate here. Now, I like this picture. I think this is somewhat of a gauge of how active the current market is, right? And when activity is very high, attention is very high, the price tends to be elevated, and we don't necessarily want to buy when prices are high, right? That's when we want to sell. Now, when attention is low, when there's not a lot of activity, that's when dollar cost averaging becomes attractive. Now, with the reduction of growth since beginning of last year, since this sideways trading range in the Bitcoin price, the number of active addresses has also contracted. What we do see though, that this contraction has pretty much now finished, similar to different bear markets. We still see quite a bit of price volatility afterwards, right? So this here was the Corona crash. This was a 50% crash. This over here was the final capitulation of 2018, also roughly 50%. So both of those happened during times of inactivity. We haven't yet seen such a sudden crash in the current environment. Will this come? Who knows? At least I'd be prepared for this. I am overall bullish on Bitcoin, and we will see in the next charts why. But low activity is always a time of potential danger, because a few market participants can move the price quite heavily due to the thin order books. So the price can easier break out in either direction. Now here is what I really like. This is the supply held by entities smaller than 100 Bitcoin. And look, this is starting in June of 2021, where we have been in a sideways trading range for Bitcoin. And the supply held by the small guys, so to speak, it is constantly increasing. The smaller the balance, right? When we look here at the color coding, purple, blue, and green are the smallest. The smaller the balance, the more constant that increase is. The very large wallet balance here, right, 10 to 100 Bitcoin is fluctuating a little bit more. But what we see over here is that the small guys, the retail investors, they are continuing to dollar cost average into the market. The bigger entities, they might be selling right now. And this has been a pretty typical development for Bitcoin, meaning small retail is kind of like front running the institutions. The institutions are only adopting Bitcoin because they see small retail adopting it. They have to adopt it. They have to offer Bitcoin trading to their clients. They have to hold it because there is the demand. They want to get a piece of the pie, but there is no real fundamental conviction on a lot of institutions' side. That's very different though for the small people. And that's exactly what we want, right? This is a robust growth. You don't want to see the growth only happening from institutions, because they might just change their minds, or regulation might easily push this whole movement down. But when you've got the small entities, the average Joe buying more and more every month, and the supply is growing and growing. That's, I think, solid. So what do we see then? Or how do I interpret this since the price didn't increase? It looks like some institutions, some larger investors, they were offloading. They had to sell for whatever reason, and it's the small guys that pick up the pieces that stabilize the price. So interestingly enough, small retail has the diamond hands, institutions are a bit flaky, and they seem to be the one that are selling. This becomes even more clear once we look here at the supply held by entities more than 10K BTC. A lot of volatility here. Now, this shows pretty much the same picture as in retail front-running institutions. Here on the left side over here, we see the size of the wallet, right? At the top, the largest wallet, at the bottom, the smallest wallet. And we can see how much accumulation happens for each of those wallet sizes. So blue means a lot of accumulation, red means rather selling. What we can see here is that retail tends to buy more consistently. They tend to buy earlier, and then afterwards comes the institutions that start to adopt somewhat. So we had one of those waves here in October of 2021, another of those waves in February of 2022. Right, we can again see somewhat of a slope over here with small retail starting the trend. And currently, again, we see pretty much the same. Retail is starting to buy. And I think this paints a pretty positive picture. It paints the picture that institutions might again be late to the party. But if we are simply buying for long enough of a time frame, they might also join again as well. This chart shows that currently might be, in the grand scheme of things, right, when we zoom out, a good time to get more aggressive on dollar cost averaging, even though we do have the downside risk, right? We haven't yet seen a crash similar to 2018 or to Corona. So of course, don't bet the whole farm on this. Don't go with too much leverage, but look at the activity here. We see the realized cap hodl waves of coins smaller than 3 months. In other words, how much activity across short-term investors is there currently? How much speculation is in the market? When the price is very high, there is a lot of speculation, right? A lot of coins have recently moved. People that hope for the current upwards trend to continue, they get in. And when we just get the smallest of a retracement, those short-term investors, they exit again, causing then a ripple effect for the price to really go bearish. So you don't want to see too much speculation, too much short-term holders in the market. That's dangerous. You want to see the exact opposite here. Look at when we have been at a bottom in Q1, Q2 of 2019. This was also pretty close to the price bottom of Bitcoin. When we've got elevated levels, that's when the price tends to stop rising. Again, at the beginning of 2021, we had levels that were almost as high as during the bubble of 2018. And this is when the price stopped declining. Now, I find it very, very encouraging that we are now again at relatively low levels here. There is not a lot of speculation going on for Bitcoin. Of course, the Bitcoin dominance also went down, so a lot of speculation shifted over to the alts. Altcoin speculation is still somewhat active, but that's, I think, the good story for Bitcoin as a long-term investment. The small guys continue to consistently dollar cost average into the market, and they do this despite the active traders exiting the market. So it's not necessarily true that retail is only speculating on high risk, high reward. Retail is also DCAing into Bitcoin. And that's in the end what I think will finally create the price floor for Bitcoin. In another video, also discussing the Bitcoin on-chain metrics, we have seen that the long-term holders, they dollar cost average into Bitcoin faster than the daily issuance of Bitcoin is, right? So Bitcoin also has an inflation. It goes to the miners. The miners, they might sell their Bitcoin, they might not. But that new supply hitting the market, it's at a slower pace than what the long-term holders are buying into. So all the downward pressure that we see temporarily, it all comes from the short-term speculators. Now, when there aren't a lot of short-term speculators in the market, that shows that the downward pressure might also be somewhat limited. at least over the very, very long term, right? These crashes, they happened during times of low speculation. So I'm not saying we can't see things like this again. It could happen. But those would then likely be final capitulations. If we see again something like this, that would be a fire sale. This would be the time I would go really, really heavy on Bitcoin. Now is already a good time to continue to dollar cost average in. But if we get this golden opportunity again, this great time to buy Bitcoin at strongly discounted prices, that would of course be the ultimate dream scenario. Now here's where it becomes interesting. When we look at the total supply held by long-term holders, this is going sideways since October of 2021. The price went down, the supply held by long-term holders was flat, so the price decline was caused by short-term traders. Now why is this going sideways when this is going up? And the reason is simply because the supply held by very large whales, it's going down. So it's a move from the institutions to retail, something that I very much welcome, that I think is long-term very positive for Bitcoin. Retail, or the small guy, is really the backbone of Bitcoin. And we can see this here again. Over the short term, we do see volatility, but over the long term, Bitcoin tends to rise. Bitcoin is limited, fiat is not, and so the imbalance over time of how much fiat you need for a single Bitcoin is rising. Let's look again at timing. So at what multiple are long-term holders selling? That's here on the left axis. And of course, during a bull run, they're selling for really nice multiples by like 20x or so. Currently, even what Glassnode considers long-term holders, they are selling for losses. So this could be regarded as kind of like a capitulation event, right? If even the long-term holders, they are selling without a profit, that's when morale in general is the lowest. We haven't seen these kind of movements too often. During the times where we did see it, we had very nice long-term accumulation zones. Now, if you haven't yet joined our Telegram channel, don't forget to search for Bitcoin Strategy channel within the Telegram app. We are more than 2,000 people over there now. A like on the video would of course be appreciated as well. And if you're interested in daily market updates around Bitcoin, around various altcoins, if you want to ask me any questions directly, there is a premium membership. The link is in the video description. It's thebitcoinstrategy.com. More information on that is also in this video. Hope to see you in that video, and thanks for watching this one. Bye bye.